What's up, everyone? Been pretty busy recently, but I figured I would stop by for a quick update. So that with that, this will be the Dividend Snowball Portfolio or episode 414. As always, nothing is investment advice. This is just keeping track of what I'm doing, which recently has been plugging away, adding 10 shares a week of Propel. Now, I have been digging deeper into their history in the last few weeks and trying to come up with the right number, the right level of how much of it I should want to have in assorted portfolios. I've kind of refined my thinking of what to expect, and one of the things that I think well, there's some pros and cons that I'll get to in a second. I think there's a decent chance that normally with their seasonality, Q1 is probably going to be the highest return on equity quarter, and then there's going to be a bit of a dip. So I just there might be more time to buy it, like through the summer. I am past the moving past the FOMO stage and into I still like it. I still think it's a solid buy. Now, the thing has been that as I have been looking for reasons why I own it, why I shouldn't want to increase the position, and why, it's not that exciting. I haven't really found them. I've actually, as I've been digging in, I've kind of been finding things where I like more and more about the company and more what I'm finding. I think the management has is very high quality. I think that I don't know exactly what types of verticals and horizontals they can launch, but I think there's a very large addressable market, and I think it's still a fairly small company at 1.2 billion Canadian or less than a billion US. And execution has been, very good so far, and it looks on track to continue. And the valuation, I mean, you look at a company that's growing like this, and normally I would say the vast majority of the time it gets a much higher valuation than this. Now, that's not part of my thesis because I think companies in this industry do not often get awarded a higher valuation. There's some reasons for that. So it's not part of my thesis, but I'm just looking at it like it kind of, if we're going to assume a static thesis, a static multiple, because often when I look at a company with this type of growth, I'll look at, okay, how much is the multiple going to shrink over time as it grows into whatever it grows into the multiple. Here, I kind of look at it as book price to book will probably shrink over time as the return on equity gets smaller, but the earnings can still grow. And if they keep, any retained, any type of keeping ROE, return on equity, as high as it is, it could grow significantly. So, and looking, listening to the conference calls and the different talks about the company and the plans, I've tried to be like, okay, why is growth peaking? And there's some reasons. Look, mainly, if you look at the operating leverage to date, it has been spectacular. So that in that respect, the growth rate is probably going to slow. In the fact that they're getting bigger and it's harder to grow at a faster pace, the growth rate's probably going to slow. But there's still a lot of levers and scalability, I think, and that's kind of what I've come away with. So basically, I I assume I've kind of made a very a number of loose models just based on Excel, and I think even if I come out with the return on equity deteriorating back down to um, you know good but not as great as it has been recently level, I could still come out with a very workable internal rate of return on the investment and some decent growth from here. Now, the pros and the cons are basically this. The pros, I feel there's structurally, I feel better about believing that there's a structurally higher return on equity than what I was kind of thinking was possible before. But as I kind of dig in, I think it's higher for longer. I think there's a lot more room for, I think there's a lot of room for growth. And even within the current balance sheet capacity, I think there's a lot of room for pushing higher on a number of metrics. There's also the fact that lending as a service can improve the margin from here and can help them scale faster without the need for their own balance sheet, and kind of give them access to scaling. On the con side, yes, Q1 seasonality is generally the peak. And this a peak in return on equity, and there's a relevant risk that Q1 was an overshoot on earnings, and so I don't know what the market would think if or when return on equity comes back down in the rest of the year. So that could be a risk. I don't I don't know. I'm obviously not trading this thing quarter to quarter. I just think that maybe there's plenty more time to buy. I also think that if they were to reach basically what their guidance would be, it might be it's considered a bit of a short-term risk as the market by the market, because they've been achieving more than the guidance, and if it kind of it might deflate the they were just being conservative type of ideology, which they beat guidance in Q1 by a fair bit, and so maybe people are expecting more. So there's a lot of short-term risks, but there always is a lot of short-term risks, and I'm trying to be more constructive and long-term in my approach for this. Now, I know my history, and I know that there happens to be a few times a year where I generally just get overly focused or FOMO on something. And I think that I'm approaching the point where through all of the combined exposure I have, I think I'm past the FOMO stage. But it's still at a point where I'm basically don't have any better ideas to put money in right now. So I'm happy to keep buying, and I think it's a good potential based on what I see in the market today. Now, when I say I've FOMO'd on things, often they don't always work. And in fact, I don't know that the hit rate would necessarily be that much better than just general investing. But, recently going back, one was kind of too recent to say. The one before that hasn't been going well so far. I mean, a few before that were good. One before that was okay. And then one before that was bad. Now, in fairness, one of the good ones was also kind of a break-even type of microcap, but generally that doesn't seem to be great when I'm FOMOing on a break-even type of microcap. Really, the ones that have done well are kind of GARPy type of things, and so hopefully this can work out all right also. Now, the FOMOing into trying to build a relevant position, normally that's kind of a growth account phenomenon. I don't know, my head just kind of wraps to the math of, finding a position to try and like push the whole returns on the account. I don't know. It's kind of a partially a challenge that I put on myself. So normally I'd push it something like a FOMO position to hopefully over 5%, but here I'm trying to take more slow, balanced, methodical portfolio approach. It's currently at 1.5%. Um, you know, the dividend's a bit low for a dividend portfolio, but it is growing quite rapidly. Now, going forward, I'm probably gonna keep nibbling on this. That's kind of where my thinking's at now. But if I find something else, I will, you know, add to that other thing too. Don't want to get over the top. I kind of targeted 2 point something, 3% in this. That would be, still a few weeks away, but I'm at the point where, okay, we'll see how it goes. So this is what the portfolio looks like today in terms of where the dividends are at. So that's where I'm at. And this is the budget little cropped summary for month end, where April it was an average of 403 a month, and May it was an average of 400 and well, not an average, but a run rate of 413 per month. And I will keep these up to date as the as things unfold. Now, I don't expect June to be that impressive because buying things with lower dividends and probably won't get any dividend raises. But constant progress is what I'm aiming for, and hopefully we can get some growth over time. That's it for today. Thanks for watching, everyone. If you have any good ideas for things that I should look at adding to this type of portfolio, please drop them. If you have any questions, I have a few ideas of other videos, but as I said, I've been pretty busy recently. I try to answer anyway. Have a great day.